largest real estate private equity firms. And in 7 years, they have built India's largest portfolio of consumption centers. Nexus is a proxy for the Indian consumption and organized retail growth story. 88% of the leases have a turnover rent clause, which enables investors to participate both in a steady income stream from the base rent as well as the potential upside through strong sales recorded by tenants. Nexus Select Trust is expected to be listed on the Indian stock exchanges and would be the first publicly listed retail REIT in India. Just talking through the portfolio very briefly, the portfolio comprises 7 best-in-class Grade A urban consumption centers with a total leasable area of 9.2 million square feet, 2 complementary hotel assets with 354 keys, and 3 office assets with 1.3 million square feet. Which are strategically located across 14 leading cities in India, which contribute 30% of India's total discretionary spread. We have a high qualified, diversified tenant base with over 2,800 stores, with international brands contributing 47% of gross rentals in December 2022. The portfolio is highly stabilized with a committed occupancy of 96.2% and a 5.7-year WALE as of December 31st, 2022. This portfolio achieved 11% CAGR in tenant sales between FY18 and FY20. This was before COVID, of course, and the 3-month December 22 sales have recovered to 128% of pre-COVID levels. With this, let me just share a few key points on the current transaction. At the top end of the price band, the market cap of Nexus Select Trust would be 15,150 crores, which implies an FY24 distribution yield of 8.25%. The total net operating income is expected to organically grow by 17.1% between FY24 and FY26, led by a combination of contractual rent escalations, increased tenant sales, leading to higher turnover rentals, and releasing at higher market rents. The net offer to institutional investors will be not more than 75% of the net offer to the public, of which anchor investors would get 60%. The net offer to non-institutional investors will be not less than 25% of the net offer to the public. The price band is going to be between 95 and 100 rupees per equity unit, and the bid lot would be of 150 units and in multiples of 150 units thereafter. Just touching on some key dates. The anchor investor bidding round would be on May 8th. The bid for the public would open on May 9th and would close on May 11th. We look forward to your support on this offering. Thank you.
I now request Ashish Mota from Blackstone to say a few words, please.
Good afternoon, ladies and gentlemen. Thank you for joining us today at the press conference for Nexus Select Trust. It's an honor to be with you today. As many of you would know, Blackstone's been a long-standing investor in Indian markets over the last 17 years. And over the course of these last few years, we've built robust businesses and acquired high-quality assets across both our real estate and private equity businesses. We have been high conviction and thematic investors. On the real estate front, on the back of service sector growth, we've acquired today India's largest office portfolio spanning 100 million square feet. Similarly, on the back of strong domestic consumption, increased urbanization, and strong middle class growth, we've built Nexus. Nexus today is India's largest retail platform spanning 17 malls across 14 high consumption cities. Under the leadership of Dalip, it has transformed into one of the leading platforms in the country. Over the last 7 to 8 years, we've also interacted with regulators to form India's REIT market, and since 2019 have launched India's first 2 REITs. REITs offer competitive performance, a tax-efficient distribution, downside protection in an environment which is as volatile as we are seeing today. With inflation and rising interest rates, REITs offer a very hedged performance. To give you a sense, Retail participation as a result of this has increased in rates almost 18 times since we first launched Embassy back in 2019. As a result of this, Blackstone is thrilled to launch Nexus Select Trust as India's first retail REIT. As many of you know, Select City Walk, India's top performing mall over the last more than 10 years, has agreed to partner with Nexus on the street. And I'm delighted that Arjun will be joining us on the board, which will add significant value to the platform going forward. As always, we are committed to building strong local businesses and communities in India, leveraging our scale, our global networks, and operational expertise. Thank you.
There is a clicker. Yes, there is a clicker. Okay, guys. First of all, apologies for whatever's happened. And a very warm welcome. Good afternoon, and thank you for coming. It's indeed a momentous occasion. We are here to, in a sense, launch India's first retail REIT. What I'm going to do over the next 10-15 minutes is take you through a journey which is not very long. The whole platform started about 7 years ago. So that's the first thing I'm going to do is take you through this journey, how this has actually been built, the whole portfolio. Number two, give you some details on, I'm sure you know a lot about it, but maybe some details about how this portfolio is performing, both pre-COVID and post-COVID. I think all of us have been to malls. All of us stopped going to the malls during the COVID period. And post that, I think there's been a resurgence. So I'm going to show you performance pre and post-COVID. And finally, I'm going to request my colleague Rajesh Deo, who is the CFO, has been with the business right from the beginning. So he's one of the first few people who came onto the platform, and he will take us through the projection as to how this business will go forward. Okay, let's start first with what do we have today. In front of you, you have on the screen some of these numbers you're familiar with. 17 malls, almost 9.8 million square feet. 96% occupancy, right? So these are numbers that you're familiar with, 14 cities. There are three facts that I wanted to point out to you, which I think are extremely important. And why do I believe that this is a little different from the other REITs and so on and so forth? The first thing is that if you look at what is driving this business, right? Focus on that number. We have almost 3,000 stores, 1,000 brands, 3,000 stores, and in terms of tenant sales, $1 billion in tenant sales pre-COVID, right? And more importantly, 130 million footfalls, the number that you see over there, that's just to give you the perspective, two times UK's population of 65 million. Yeah. So from our 17 assets, 130 million footfalls. Now, if you triangulate these three things, the first, that there are 1,000 brands, 3,000 stores, and the fact that we have $1 billion in terms of tenant sales, 130 million footfalls, what are we sitting on? It's not just a real estate story, ladies and gentlemen. It is indeed at the center of India's fast-growing consumption story. That's really what we are. And I think when you go out and you write about it or talk about it, please remember that's one huge difference. The second one is that we are a pan-India platform, as you can see from the map. Most mall operators, as you would have seen, are very geographically centered. We are perhaps India's first pan-India platform. So these are the two things that I think are important. Coming to the next one, give you a sense of what this portfolio is. I don't know if any of you have been to Seawoods in Mumbai. Anybody in Navi Mumbai? Wonderful, wonderful. I will have a special present for you. Yeah, so I think all of us have been to some mall or the other, and these are some of our marquee assets. Can't put all 17 there. The one that is there, which is Select City, I'm sure there are people from North as well who've joined the call. Arjun is here. He's done a fabulous job with running the center. Probably one of the best run, highest performing centers in the country, which is Select City. That's rolling into the REIT. Two or three things that I want to point out. One is that our model is actually an acquisition model. So all the 17 assets have been acquired over the last 6-7 years, right? So all these assets have been acquired with different brand names. So the last 8 that we acquired from Prestige in March of 21, which was at the peak of COVID, all those assets were called full. So the first thing that we have to do when we acquire these assets is to figure out how are we going to rebrand them. So middle of last year, what we did was actually rebrand the entire portfolio as Nexus, as you can see. So that's the first thing we do. The second thing is that look, at the end of the day, these assets have been underinvested, undermanaged, and how do we make sure that they are engaging enough for customers to come in? Because that is our business, right? So we've upgraded all these assets, as you can see. All of them have been upgraded, and some of these look completely different. And I'm going to show you some pictures as we go forward. Uh, the third thing is that we are in almost all the key metros. We are also in some of the important mini metros like Pune, Ahmedabad, and there's this unique mall called Elante in Chandigarh. People who've been to Chandigarh, this actually caters not just to the city but to 3 states: Himachal, Punjab, and Haryana. It's one of our best performing assets. So that's really what it is. And the last bit, which is perhaps equally important, is every single market that we are in, we are either the number one brand or a very strong number two brand. Just to give you a sense of how this business model works, yeah, what is our value creation model? Because, like I said, we are basically an acquisition based platform and we have acquired all these assets. There are 4 things that we do post acquisition, and I explained some of it to you earlier. One is upgrade the asset. So, if you take the pictures that you saw, all the assets have been upgraded. I'll show you some more pictures later. The second is how do we bring in better brands? Because all of us go to malls because we want to buy something. And if all the malls have the kind of brands that we need, only then will you start coming in. I'll give you one example. Over the last 18 months, in the 8 malls that we bought from Prestige in the south, we've added 200 new stores. Right? We've taken marquee brands like H&M to cities like Bangalore, where it's difficult for brands like H&M to go. So size and scale helps us to bring in better brands. Third thing that we do is also bring in marketing, because these are typically assets which have been underinvested in terms of marketing. Because the 2 things that we influence is footfalls and spend per footfall. And fourth is optimize the cost structure, because now with 17 malls, 7 years of experience, we know what standard cost is for a mall. So that's really our value creation model. Give you some examples of before and after, and these are interesting ones, just to showcase what exactly do we do. This is Hyderabad, a good mall, running well, but as you can see, not looking all that good, in the before picture. And post that, this is how the mall looks today. Doing extremely well, very high growth in the 9 months ending December 22. Let me give you one more example. This is from Bangalore, which is Whitefield, a mall that has seen many changes, many avatars. Last, it was called a value mall. Today, again, one of the best performing malls, growing at 20% plus, and this is how it looks. Yeah, and let me give you some examples of what else we can do with some of the stuff which is inside the mall. That you saw was exterior. So this is now Amritsar food court. Yeah. Why are food courts important and why do we focus so much? Remember, we are a family destination. 80-90% of people who come with their children, with their families, and food court becomes a very important part for them. And this is what happened in Amritsar. Long story, but fact is that it changed the complexion of business in that mall. And this is a recent one, which is Shantiniketan in Bangalore again. It is now one of the largest food courts in the city of Bangalore and doing extremely well. So what we do essentially, like I said, is look at not just the facade, but look at insides of the mall as well to see what we can do. Give you one example, final one, which is in Hyderabad. Look at the lift lobbies and pre and post. The reason for showing you this essentially is that look, this is a very important part of our value creation model, and this is the kind of impact that we can do with investment in upgrading the assets. Is that leading to good results or not? I think that's the key question. Let me take you now to the numbers. On the left hand side, the 2 bars that you see, that 11% CAGR, which is the average growth rate over FY 18 and 20, that was pre-COVID. So these malls, like for like,
बट ये लेना पड़ता है वीडियो में
11% CAGR over that period. Then you see on the right what happened during COVID. Obviously, both into first year and second year, sales came down. The important thing here is that post-COVID, which is the extreme right that you see, there are three numbers that you see: 120, 124, 128. Let me start with 128, which is the last number for December quarter 22. All the comparisons on this chart are with FY 1920. Why 1920? Because 1920 was the last normal year pre-COVID. So what does 128 mean? It means that the recovery is 28% higher in December quarter 22 versus December quarter of FY 1920. So I think there's been a lot of discussion, debate, conversation around what is happening to business post-COVID. I think this is a very good and very strong example that recovery has been excellent post-COVID, and this is across most categories. A final couple of charts on what is this industry all about, and this is again an important one. It's still a nascent industry. There are only 100 malls which are A grade. And the way we define A grade malls is essentially malls which are not strata sold. So let's assume there are 250 stores in a mall and half of them are sold. That's called a strata sold mall and very difficult to manage. So what we acquire essentially are A grade malls. Out of this 100 assets, the top 4 or 5 guys in the business, including us, own probably 40, 45. Balance 50, 55 are out there, owned by people who have either a single asset or maybe two assets, and these in the future could come up for acquisition. So this is on the supply side. Let me put this 100 number into international context. Uh, Shanghai alone has 100 malls, A-grade malls. New York alone has 100 A-grade malls. So clearly, as far as India is concerned, I think the opportunity to grow here is significantly higher than what we have today. What gets added to this pool is only 3 to 4 million square feet. Right? Please remember that. So there is a total of 60 million square feet, and what is getting added is between 3 to 4 million square feet. What's happening on the demand side? And this is an interesting one. I think all of us know that retail post-COVID has seen a resurgence, and it is reflected in numbers that all the retailers, whether international and domestic, are talking about. And the demand is quite phenomenal in the sense that if you aggregate everything between Indian domestic and international retailers, F&B, etc., we're looking at a demand of anywhere between 10 to 12 million square feet in FY24. Versus that, like I said, we have perhaps about 4 million square feet coming on stream. So clearly, there is a mismatch between supply and demand, leading to two or three things. One, occupancy levels have gone up significantly. As I showed you on my first chart, we are at 96%. Marginal rentals, about 10% of rentals come off a chart every year, is almost a 20% upside. So that's really the business model that we have. Let me now hand it over to Rajesh to take you through the financials and the projections. Thank you so much.
A very good afternoon to everyone. It's an honor to be here to present on behalf of Nexus Select Trust. I'll run you through some of the key predictions and financial numbers. We have a robust business model with stable cash flows built upon 3,000 stores across the 17 assets in 14 cities. Just to give you a snapshot on the lease structures, 95% of our leases have a fixed rental clause with contracted escalations of typically 15% every 3 years. In addition, 88% of our leases have a turnover rent clause. So our lease structures are designed to achieve stable cash flows with the ability to participate in the consumption-linked upsides. So what does it mean in terms of rental income? If we have a total rental income of 100, 87 or 88, 87% comes from fixed rental, and 13% is what is linked to tenant sales, which we call a revenue share component. On the cost side, about 80% of our total costs are recovered from tenants contractually, thus shielding us from the inflationary environment. So again, the platform is well positioned for a very strong inorganic growth. If you see on the top left-hand chart, we started our journey in 2016, and in just 7 years, we have created the country's largest platform through consistent acquisition. And due to our very high conviction on the India retail growth story, we acquired 7 malls from Prestige down south during 21 in the middle of COVID. And in just 7 months, in just 15 months, we have reinvested about 100 crores in terms of renovation capex, reposition the mall, where the net operating income has kind of grown to about 15%, 15 to 17% in about 15 months. The future for acquisition is also attractive for the portfolio. Like Mr. Sehgal mentioned, there are only these 100 data assets in this country, out of which platforms like us and other platforms own 40 of them. And the balance 60, the ownership of the balance 60 is fragmented with individual developers, which is non-core to the business. And at some point in time, they will kind of look at liquidation, and that is the opportunity that we are looking at. REIT as an instrument is again lucrative from a seller's perspective, because what happens when you convert, when you transfer the physical asset into the REIT in exchange of units, that transaction is tax exempt. And that is why Select City Mall, which is the best performing mall in the country, is rolling into the REIT in exchange of units. Plus, we have the flexibility of paying the consideration in cash, and that the fact that lowly levered balance sheet of about less than 20% loan to value on listing will give us significant headroom to acquire assets to grow the portfolio. So, basis what I mentioned, we will continue to identify, acquire, and integrate new assets to grow the portfolio. So, again, the portfolio is well positioned for strong organic growth, and I'll run you through the net operating income bridge, which can also be referred to as the operating profit. So we have in the draft of a document we had projected for 23, 24, and 25, and the fact that because we filed our offer document in 23 April, we have again projected for 24, 25, and 26. So basis the 9 month ending 31st December 22, we are on track in terms of what we had projected for FY23. And then we are projecting the net operating income to grow from a 16.9 billion to 18.97 billion in 26. And these are the 5 pillars of growth, which I will explain you in detail. So, like I mentioned, about 95% of our leases have this contractual escalation of typically 15% every 3 years. So, if you look at the first bar, the second bar, 41% is projected to come from contractual escalation, which means about half of the projected growth is coming from signed contract, which is certain and in our pockets. 11% is projected to come from lease up of vacant space, and from the time we filed the draft offer document to the time we filed our offer document, we have significantly upleased this vacancy, which is now 11%. And this is the current run rate. We estimate this to get leased in the next 6 to 9 months. 37% of growth is projected to come from two components, which is revenue share or turnover linked upside and mark to market opportunities. I will break it into two parts for better understanding. So, out of this 37%, 10% growth is projected to come from revenue share, which is based on a sales projections of about 8.5%, which is again conservative, looking at a past growth of a CAGR of about 11%, with Mr. Sehgal presented. Mark to market opportunities in this business, what happens is we look at the portfolio, at least 10% of rentals comes for expiry every year. And whenever we renegotiate with the existing tenant or get a new tenant, we get a spread or upside of about 20 to 22%. And this is what we have been achieving over the last 5 years. And this is how we are projected for the future. So these two components taken together will account to a growth of about 37%. We have two hotels, one in Chandigarh, one in Bangalore, 354 keys, and the growth from here is projected to come from about 4% of total growth. Hotels again doing extremely well post COVID, where the areas have gone up by about 45-50%. The last component of growth is some of small revenue streams like growth in CAM income, some savings from solar power, and parking and marketing income. So, basis what I said, the fact that we have a very strong visibility into every component of growth in the net operating income bucket, and basis that we think we are in a comfortable position of meeting these predictions. Thank you.
India is one of the fastest growing major economies in the world. Its growth is fueled by an expanding middle class population and rapid urbanization. This is driving a powerful trend in consumption, which makes up nearly 60% of India's GDP. As India's leading retail consumption center platform, Nexus Select Trust is uniquely positioned to capitalize on this mega trend.
Nexus is an impressive consumption center platform with 10 million square feet of retail space. It has 17 assets across 14 cities. These cities collectively represent 30% of India's discretionary retail spending and have growth. Our net operating income is projected to grow over the next 2 financial years as majority of our leases have contracted rent escalations and turnover rental upsides. We are also well covered over 80% of our operating expenses from our tenants over the last 3 years.
Organized retail in India is different from what you see in other markets like the US. The sector is supported by an increasing young population, limited penetration, and a consumption boom. Around 300 international brands have entered the country over the last 10 years, while domestic brands continue to expand. Ongoing demand is met by a constrained supply of Grade A space, which has resulted in strong rent growth in our portfolio.
What sets us apart is our ability to move with speed and scale once we spot a trend. In 2015, we saw that organized retail was in early stages of growth and moved quickly to build Nexus. Today, these properties are part of India's infrastructure and would be difficult to replicate given the scarcity of prime infill land space and long development timelines.
Our properties have become community destinations for shopping, entertainment, and dining, enjoyed by people of all ages. We are constantly enhancing our customer experience and tenant performance through proactive marketing, capex, and operational upgrades. This has resulted in strong sales performance for our tenants.
A key driver of our success has been close relationship with tenants. Since 2017, we've leased over 4 million square feet to leading multinational and domestic businesses, resulting in our portfolio being over 90% occupied. Our scale is another advantage. We have over 950 brands spanning various sectors, and Nexus is often the first port of call for brands looking to establish or expand their presence in India. The power of our network gives us an enormous amount of proprietary data and insights which help us curate the tenant mix to match our customers' evolving preferences.
Our platform benefits from stable cash flows with multiple levels of growth. In addition, we expect our lowly levered balance sheet post-listing will enable us to acquire more assets and drive inorganic growth through value-accretive acquisitions.
We are committed to making our properties sustainable and great places to work. I'm proud to say that we are engaged in over 50 ESG initiatives. These include building renewable power plants and making our properties greener. With a highly experienced management team supported by over 500 employees, a leading sponsor and best-in-class assets, and a strong tenant base, we couldn't be more excited at the growth prospects of our business.
We're committed to bringing innovative investment opportunities in India and around the world. In 2019, with other sponsors, we launched India's first REIT. It has since delivered strong returns for investors. We're so proud of what we've been able to accomplish in India, and we're thrilled to launch the country's first retail REIT. We believe it's a special opportunity to be part of this unique journey and to benefit from India's strong consumption tailwinds. Kailash, please go ahead.
Hi. My question is to Mr. Why did you decide to join Nexus Select?
Great question. So first of all, welcome everybody. Some of you had the pleasure of meeting before and some new faces. As Ashish said, and as Dilip alluded, Select City Walk is one of India's #1 shopping centers, if I may use the word, in terms of sales per square foot. And it offered us an opportunity to convert our physical asset into a financial asset. And as I think Rajesh explained, when the law permits you to convert your shareholding into REIT units without any capital gains tax, so it's a very efficient and a clear route for people who own assets to convert them into a financial asset. So rolling it into a REIT is absolutely a brilliant opportunity. Also, the law permits that great part of your distribution is tax-free, and you get a steady income out of it. In our case, the relationship went a little deeper. We managed to kind of work together to integrate our teams and bring synergies into the business going forward. So Nexus, already led by Dilip, is a fabulous management team. We're very proud that our management team will integrate under the leadership of Dilip, and we will have a win-win story where we can grow the platform in times to come. So that was really the motive, and I presume there'll be other people like us who would be motivated
बंद कर दो अभी
to consider following these steps.
चलेगा
Because
रहने
it
दो
is
ना
actually the best way of
5 मिनट
monetizing your asset and having a stay in it for the long term, should you wish to do so. I'd also like to just add to what you're saying that me and my sister, who were predominantly great part of the REIT, we are not selling anything to UFS. We believe in the story, so we wish to be long-term investors in the platform.
Yeah, hi. Shiraditya Pandit from Informist Media. A couple of questions. First is regarding the map of assets. I mean, it's a bit skewed towards the west and south. So, do you think are you planning any acquisitions in the north and east, perhaps? And number two is, would you have wanted to list earlier, but and like were you waiting for the tax tweak to happen or like retail to recover a little more? That's the bit.
Ashish, would you take that?
Yeah. So look, I think for us, I think the east and the north have been markets that we've sort of looked at in the past. I just think it's a function of availability as well. So there aren't that many grade A institutional stock out there today that you would require. Also, you need willing sellers to sort of do this. But clearly, the east and north continue to be areas of interest for us. Cities like Calcutta, are important, and therefore we will continue to grow this portfolio, across markets. So that's on your first question. On the second, related to timing, we've been investors in the mall platform since 2016. And if you look at the portfolio today, what we've achieved is really across all our 17 assets, as Dilip said, we've renovated each one of them. Our occupancy levels across the portfolio are more than 95%. We've seen very strong sales recovery post-COVID. Our sales growth over pre-COVID numbers are more than 30% higher this year. So what we've really done is, really stabilize these assets before bringing them to market. And I think what it does enable us to do is position this whole platform for what I call, the next level, which is, you have 17 malls, you stabilized all of them. How do you start growing this platform from 17? And if I were to sort of put a number to it, I think you can double this platform over the course of the next 5 years. So that's really what we want to sort of position this for, and that's really why we think right now is the time to sort of take this public. And as Arvind said, the REIT does give you the flexibility to add sellers, not only for cash but also for units. So that's I think the added flexibility that you get with the listed stock out there.
Share there, because while the bigger cities have done well for you so far, that's also a much more competitive market. And if you also just look at the consumption story overall, you'll have to say that consumption growth has to come from middle India and some of the smaller cities. Is there an opportunity to really build out in those places, or is it too early to still go in there in a meaningful way? How do you look at that?
Okay. So let me try and answer some of it. I'm not so sure about tier 3 and 4 because I think then you're really going down the question. I think just look at the fact that we are in 14 cities and most of them are metros, mini metros, and some of them are what you would call tier 1 and 2. So that's part 1. Part 2 is obviously we would look to first consolidate in these 14 cities. Number 2, what is the next level? State capitals. Because today if you look at any state capital, I think there are huge pockets of consumption and great growth. I'll give you one example. our
लेफ्ट
mall
में
in
टीवी
Bhubaneswar,
देखो उधर
which we
साला
launched
मछली
in, I
देखो
think,
लेफ्ट में टीवी है
2018, is one of our best performing assets. Despite the fact that after that another 3 months have come, it's still the best performing asset. So there's huge potential over there. Thirdly, to answer your question as to where else can we go, I'll give you one statistic and maybe then we can look at it. There are 115 cities in this country which have a multiplex. So if you were saying what is the surrogate for where malls can go, then I'm saying there is probably 100 cities in this country where malls can potentially go. But from our perspective, like I said, the first preference would be to consolidate in these 14 cities, then go to towns which we believe are very strong consumption centers, essentially starting with state capitals, and then go to what we're saying, which is a tier 2 perhaps. 3 and 4, as of now, honestly, I don't think we would do it. Also, they would have very few relay malls.
Understood. Just one more question for the both of you. Are there any concerns around an impending consumption slowdown or inflation or anything affecting demand at a macro level? We've seen FMCG companies, we've seen anecdotal data so far to at least say that consumers are getting worried. There's a certain portion of consumers who are being careful. Is that maybe it's not being reflected right now, but is that in your projection for 9 months, 12 months or further? Is there a sign of that?
Let me take this one on. I think if you go back and see the kind of growth that we've had in FY23, clearly there was a pent up demand. So it's not that you're going to grow at 28-30% every year. That's not going to happen. So there was a pent up demand. Is the growth slowing down? I think if you look at quarterly growth, at least in our case, the answer is no. Number two is FMCG growth in some parts of, let's say, the pop strata slowing down, quite possible. For the simple reason that most FMCG categories are 90% plus penetrated and they target a very different set of consumers who can get impacted if there is high food inflation or if rural growth slows down. That's the impact which you see. Our kind of consumer is essentially a middle income consumer. And I think so far they've not really felt any serious impact of what's happening. If you look at the broad macro numbers, and I'm sure you're aware of it, with GDP growth of 6% plus, inflation below 6%, and a fiscal deficit around 5-6%, you're looking at a consumption growth of 10 to 11% in the kind of markets that we're talking about, and perhaps even better. So, are we seeing a sign of slowdown? As of today, the answer is no. Will we see 30% growth happening year on year? Again, the answer is no. But if consumption grows at 10-11%, that's the kind of growth rate that we would want to achieve as we go forward.
Thank you so much.
I think the organized sector in India, between malls and e-commerce, we are about 11-12% of total media. And therefore, the headroom that you have in terms of growth, both for retail malls as well as for e-commerce, is enormous as you keep eating into the pie. So even if the pie doesn't grow, you can keep eating into the unorganized sector and still see the same levels of growth that we've sort of seen in the past. Again, not the 30%, but early double digits very good. So I think there is that headroom that we have as compared to some of the slowdown that you're talking about.
The final, sorry, just one last number. I'm sure all of you are aware of it. You've seen the April GST collections, which is a surrogate in terms of what people are consuming at 1.87 lakh crores. It is the best ever number, right? So that's clearly a surrogate for how consumption is going.
Good afternoon, Gitanjali Kedia from spconsumer.com. Can you clarify if the NDCF will be distributed 100% or will it be 90-95%?
Rajesh?
The new regulation requires 90% to be distributed semi-annually. What we have modeled and kind of put is 100% on a quarterly basis.
Right. That's why your yield is coming to 8.25 and not 8% because it will be quarterly.
Quarterly compounded 8.25.
And also for you, the unit holders, the taxation will differ based on the component of distribution. Can you even clarify what component is the interest rate, what is the rental, the dividend, etc. Just for
so broadly, 2/3 will be taxed in the form of dividend and the principal. What the government has come up on the principal repayment part, which was not taxable pre-budget, and what finally came up is it will be treated as a capital gain and tax
founder sells the unit after reduction of the cost of acquisition. And the cost of acquisition also needs to be registered by the amount of principal repayment that the REIT makes to the unit holders.
Sure, sure. So the one third bit will be capped, will be taxed on a future date, not on the date of receipt.
No loss. So if I have to just break up, and let me just break up year one distributions first. For these, 55% comes from dividends, which are tax free. You have roughly about 35% or so, which comes as interest, which is taxed at the marginal tax rate for every relevant investor. And the balance 10 odd percent is a return on capital, which is essentially tax deferred till
Sure.
0.7.
Understood. Thanks for the clarification. Finally, what is the ownership of Blackstone pre and post? If that can also be clarified.
We are currently about 59%, so call it close to about 60 odd percent in the REIT. Post IPO, we will still continue to hold 43%.
Is 40% with select? No? Or are there other?
Have 24.75%, just tan under 25.
And what the balance 16% owners?
So there are some of our other partners, who have also sort of rolled into the REIT, and the balance will be public.
And they are not selling.
One of our partners is, but continues to hold some residual stake. But some of our other partners are not selling.
Thank you.
Hi sir, I'm Khushbu Tiwari from Business Standard. My question is to Mr. Mehta. You, as Blackstone, has several exposure in several fields, not just in this one. And recently, we have seen the changes in the minimum shareholding norms for sponsors in REITs. Can we see any future dilutions because you are already exposed to so many REITs? Are you planning any further dilutions in any of those?
Sorry, any of the other REITs?
Yeah, any of the other REITs or even after. I don't know whether you'll be commenting on this one right now, but I'm just asking overall on the REITs because now you can bring it down to 15%.
Yes, but that's always, it used to be 25% earlier. It's now down to 15%. Look, in most of these asset classes, we've been long-term investors, and we continue to, still believe the long-term fundamentals of both the office business, where we've had two REITs, and this one that we've just sort of discussed. So I think we continue to believe the long-term fundamentals. At the same point in time, we are funds, right? And we do at some point in time have to return capital back to investors. What we've tried to do is, sell down sensibly to strategic investors who can sort of replace us in the capital stack, right? So that's what our intention is. Having said that, on Nexus specifically, like I said, we are selling down a little bit, at IPO. We definitely believe the long-term potential of the sector. If you've seen, the NOI bridge that we've sort of spoken of, there is a lot of rental growth or NOI growth that we will see, even if you don't believe in any new acquisitions going forward. So this is definitely a platform that we want to realize the growth in over the near term. So therefore, I think we will end up being again long-term owners of this stock going forward.
Just another question to you only, because you have seen India's first REIT index and REIT and InvIT index. How do you see the passive inflows coming on? Any passive inflows do you expect, or what is your opinion on this?
Look, I mentioned this stat when we launched Embassy. We had 4,000 investors, in the stock. Today we have more than 70,000, right? So over time, we're definitely starting to see investor appetite, investor understanding of this product. There are some massive benefits that REITs provide, both to the developer but to the investor as well, and that's something that we're starting to see play out. So yes, over time I do definitely expect passive investors to be part of some of these indexes. I do see over time some of these REITs itself be part of other indices. Some of these are pretty large in terms of market cap, and so I think that's something that will naturally happen over time, which will see passive inflows as well.
Thank you. Just one question to Mr. Benji, sir. Sir, sir, because you said that you all are looking forward to for their acquisitions, you might do some. Any specific areas that you have identified? Any, as earlier question was that your presence is not at east side, maybe needs to be developed more. Any such specific areas which you have identified for the acquisitions?
Yeah. So I think I answered that question in Ashish as well. I think North, just to correct, we have 4 assets there. We are in Chandigarh, we are in Amritsar, we are in Udaipur, and we are in Delhi. So it's not that we are not represented in the North. East, we have only 1 asset. But then East is also underdeveloped as a mall market. So there aren't too many assets that are available. I think more than geography, it is a question of potentially where is the next set of consumption centers likely to be available, A, and B, are they going to be accretive to our portfolio or not? I think these are the 2, 3 key things that we have to look at. And like I said, the hierarchy is to look at the 14 that we currently have, those towns, and then look at state capitals, which are large in terms of population and growth, and then look at tier 2 towns as well.
You'll continue with the acquisition model only, right?
That's right.
Thank you.
While we take questions here, there are some that have come online. Let me just be fair to people who are looking from other places. Mr. Arjun Sharma, there's a question from Delhi who want to know how did you sign on Apple Store in Select City and what are your learnings from there?
Yeah, that was a big one. First of all, we're very proud that Apple chose Select City Walk as one of its 2 opening stores in the country. It's certainly the most iconic brand in the world. And it also shows the whole premiumization of our portfolio. That brands like that, if they have to enter India, and there's a whole string of them who want to come, So while Dilip showed you some of the brands that are Indian oriented, I can certainly say that what's happening with the economies in the Europe, in the UK, in the US, and of course the uncertainty around China and Russia, that India seems to be a home where a lot of international brands want to expand. So our goals will probably give them that opportunity of being the first doors that they will enter. Maybe one, maybe multiple at the same time. Learnings, any good brand has its string of demands and they have to be negotiated and well, and they're great partners. Nothing unusual that they ask for that we couldn't deal with. And we look to see them expand in the country, hopefully with more of our doors that they can enter. That's all I can say.
There's a question about taxation, but I think you've already answered that, Ashish. There is one more on yields. The question says that what are going to be the impact of raising interest rates on yields?
I think we are already in a pretty high interest rate environment, which is why you're seeing elevated yields. I do think I'm not an expert on this, but I do think if you look at what's happening across the world, you are probably going to see reasonably elevated interest rates in the near term. But I do think this is close to the top in terms of where interest rates go. So that's really in some sense, I think we've factored in a lot of the worst, out there. Having said that, if you think about the offsets against rising interest rates, rising inflation, we have cost pass-through structures. 80% of our costs, as Rajesh mentioned, are passed through to the tenants. So really, REITs do offer quite a hedge against both rising interest rates in terms of high yields and cost protection through being able to sort of pass through these costs. So really, as a product, works very well in these kind of environments.
Yeah, among the anchor investors, what has been the kind of interest regarding from sovereign wealth funds? Because you have Blackstone has pretty good relationships with some sovereign wealth funds. You sold your Mindspace stake to ADIA, so just like if you can talk about sovereign wealth funds.
No, I don't think we can talk about this at this junction. You will have to wait till the 8th of May when the names of anchors, investors will be revealed to everyone.
Is there likelihood of there being that?
No comments, my friend.
Right. On that note, why don't I invite Mr. Narayan Sadanandan, advisor, equity capital markets, SBI Caps, to come forward for the vote of thanks.
Good afternoon to all. On behalf of Nexus Select Trust, SBI Capital Market, and my fellow BRLMs, I, Narayan Sadanandan, express my sincere gratitude to you for attending this press meet of India's first retail management has already delivered a multiple presentation, including the presentation as well as the Q&A session. Let me summarize some of the key competitive strengths of the trust. Nexus Select Trust is India's largest retail platform comprising of 17 high-quality assets, 2 complementary hotel assets, and 3 office assets, strategically located across 14 prominent cities such as Delhi, Navi Mumbai, Bangalore, Chandigarh, and Ahmedabad. They consistently maintain over 90% occupancy over the last 6 years, with 96% of the mall area leased to high-quality tenants like Zara, H&M, Uniqlo, Sephora, Superdry, Lifestyle, Shoppers Stop, Starbucks, McDonald's. Apple opened its first retail store at Select City Walk Mall, New Delhi, which demonstrates strategic importance and premium pricing commanded by Nexus portfolio house. The trust is led by highly experienced management and reputed board of directors and is sponsored by a portfolio company of Blackstone, one of the world's leading investment firms. To reiterate the deal context, the REIT IPO opens its bid offer on Tuesday, May 9, 2023, with an anchor on Monday, May 8, 2023, for initial public offering up to rupees 3,200 crores with a price band of rupees 95 to 100, and with the bid offer closes on Thursday, 11th May 2023 for all bidders. On behalf of Nexus Select Trust and other VRMs, I thank you once again, all of you, and request you to join the lunch. Please feel free to reach out to us for any queries. Good day, thank you.